Good morning, this is your Trader72. Welcome back to my YouTube channel. It is the start of a fresh week indeed. And a well-earned, relaxed weekend, although the news haven't been so relaxed, let's be honest, but we'll come to that in a minute. I hope you're all well and had a wonderful weekend. I certainly did. Very chilled out Saturday. Yesterday was a nice little day of golfing and then the end of my birthday celebration with the rest of my own family. And it was very pleasant indeed. Ate well and was on the range. I've had a bit of a back injury. It was nice to see that my back is slightly clearing and working my new clubs. Very. Some of you might find that interesting. Some of you might find that really boring. But you know what? It's all about sharing is caring, and that's the main thing at the end of the day. It would be a bit boring if it was just about news, and especially as they're not exactly cheerful news. Apart from that, what else do I have cheerful? Not that much apart from that. It's a Monday morning in London. It's grey as per usual and waiting for the sun to come out at some stage. And the summer to arrive. That would be nice to go and have a lay down in the garden and maybe even have a holiday this year. But who knows what will bring. The way the world is going at the moment, probably not that great. So it has been a turbulent opening to the markets this morning. I was just checking this morning first thing as I normally do what was going on and was, well, let's say, taken aback by the crude oil price this morning, which has absolutely rocketed to above $100 a barrel. I must admit, I didn't see that one coming, and I'm not expert. Maybe I should get my crystal ball cleaned up and have another look at it. But obviously, a few issues, we're going to go through that in a minute in terms of the news over the weekend and this morning and why the crude oil has gone up. So on the agenda, really, it's more about the news to start off with. Macro news, economical data news as well. What's coming up this week in terms of company news? We've got a few there coming up, which will be interesting, and it's specifically one of mine. Good old Adobe as well. And this, obviously, the economical news and what's going on a little bit more in depth with the crude oil, and the Middle East conflict. That will be this morning's agenda, or the morning diary, I like to call it. Let me know if you guys like that title, because if you don't, we can always drop it and work something out a little bit more generic, potentially, or even a bit more fashionable, who knows. So that would always go. Please do make comments below if there's any ideas, concepts. I'm always open to anything, or even any criticism, which I'm sure there will be about my show. I'm pretty thick-skinned, but it's always good to learn from sometimes your mistakes, especially when you're starting a new YouTube channel. Please subscribe and like, by the way, as well. That would be amazing before we start. So without further ado, let's start with today's news. And really, let's actually have a quick look first and foremost at my platform where I obviously trade and look at crude oil. At the moment, it has actually calmed down a bit. It was 108 this morning when I first looked up, around 7:30 this morning, as you do get up early in the mornings. And it was a bit of a shock, $108 a barrel. I think it actually peaked at 120 on the opening, but that would be obviously from potentially a build-up of buys from the Friday night before the close. And obviously that builds up into, obviously, down hours or out of hours trading. But yeah, I mean, unbelievable. Let's have a quick look at the chart, because it's some, I don't normally put out that, but look at that chart. This is a one-day chart. Let's have even a week. Let's go crazy and go for the 1 week chart and look at this. Absolutely piked top to the max. Unbelievable. 104. It was $78 more, even 72 at the beginning of last week, at the beginning of the conflict, or on the back end of the weekend. It went up to 78, back up down to 88. I probably should have actually bought in on oil on hindsight. I didn't realize the conflict would escalate to that extent. I knew it would drag on a bit, but not to that extent. So why are the key reasons why crude oil has gone up today, specifically? Now, there's obviously the situation. Let's have a quick look at the actual details of the conflict at the moment and where we are, and up to date for you guys. I'm sure some of you will keep up to date. I'm just giving you, if I can, extra information. I think the situation with the Strait of Hormuz, which is obviously the disruption of oil, which does actually, supply 20% of the global oil. I say 20% of oil around the world. That is quite phenomenal. A little not lake, but a river that runs through, and I don't even know actually if we call it river or lake. You'll have to obviously probably correct me on that. But it has been obviously disrupted by the Iranians, which we kind of expected that would happen. Something in their pocket there to retaliate against the Americans. Maybe not their same firepower, but certainly to kind of aim at oil tankers there. So that's obviously disrupted that. I think as well the fact that Iraq is down 70%, I've heard, of production as well. So the more disruption, the more the prices go up. As we know, for some of you who may not know this, that is the way it is. It's all about demand on supply, or supply on demand even. I'm getting it all wrong this morning, but it is what it is. So we are looking at that side of it. Obviously, there's been an ongoing 24 hours of Iranian missiles and drone attacks at refinery in Bahrain. That was a retaliation from the Iranians. And the conflict continues with continuation of bombing from the United States and Israel, intensified continuing airstrikes on Iranian military and energy manufacturers. So this is actually going to another stage now, where it was obviously clearly hitting targets, military targets. It's now moving into energy, so oil attacks on the Gulf region. So that kind of escalates the situation to maybe option 2 from the Iranians and the US in terms of what they're targeting. So that obviously will have, again, another impact on oil prices, especially if they're aiming at energy supply in Iran. Oil hitting barrels, obviously, we've just discussed that. Now, the other key point to this really is the change of leadership. Now, we weren't really expecting the fact that the last Khomeini would be the last one after he was killed early last week. I think he's about 86 years old, and he was killed quite quickly by the Americans. But the son has taken over. So Mojtaba, I don't know if I'm saying that wrong. Please correct me. Khomeini is a new supreme leader after the death of his father in the conflict. So that has obviously angered the Americans, because obviously they didn't want a further harsh regime to continue, and it seems that he was I'm not sure if he was voted in or powered in, but he seems to be obviously continuing that regime forward. So what will the Americans and the Israelis do at this stage? Well, I'm not a politician. I'm not an expert. I'm going on what else I've been given information-wise. I'm digging deep for information, and this is where we're at the moment. So what will that bring is possibly an up in scale of bombing from the airstrike, and I'm presuming that will obviously not, the markets won't be liking that either. And obviously the problem with oil going up, as we all know, and we've said it many times in my previous videos last week, inflation will go up. And we've already got a sticky inflation as it is, and now with oil being up at above $100 a barrel, which we obviously didn't want last week, it is now at that price. Now, whether that stays where it's at and the conflict along the way gets to some kind of peace talks, that's something that we'll see this week. My issues at the moment is how long will we be above $100 a barrel? At the pump, it will go up. I know that my girlfriend's petrol is going to go up from about 145 at the moment a litre to 160. So that will obviously be all factored in at some stage. So this is where we're at the moment with this situation. It's not nice. It's not great. It certainly is affecting the markets. Let's have a quick look at where we are at the moment in terms of the S&P 500 and the NASDAQ at the moment. Where are we at now? Let's get rid of that crude oil chart, and as you can see, they're well in the red again. It was actually down 2% so far this month, the S&P, so that's not catastrophic, but it is obviously obviously retracing down at the moment. So it's not been a good month so far in March, my birthday month. I'm hoping that things will obviously pick up, but there again, at the moment, right straight from the opening, 1.16%, so it's 554 points down, and I'm going to presume that on the opening it will go further down as the traffic or the liquidity starts moving up after the bell this afternoon. NASDAQ is flat and actually holding well, but obviously NASDAQ is tech, for some of you that don't know. I'm sure most of you will, but just kind of reiterating. And it seems that tech at the moment is holding, and possibly a rotation of cash going into tech companies at the moment. Defensive stocks are good, but defensive stocks are very overvalued at the moment, massively. We might actually do a little bit of a feature on that in the next few days in terms of where it's at with some of the defense stocks, which obviously would be the safe haven when issues geopolitically or of that kind around the world happen. But looking at some of the defensive stock, it looks like some of it is outrageously expensive at this moment. So we'll see what comes out there. But I guess I might just do a little bit of a feature on where some of these stocks like Johnson & Johnson, P&G are at the moment. Walmart is at last I looked was at a ridiculous price. So it could be that people are rotating back into AI and AI software companies, which is a good thing. Now, moving on from all that side of the Middle East, that side of the world, we have got some macro and market headlines coming up this week, which is obviously the week of the 9th. Second week of the month, and markets are cautious ahead of the US job data, geopolitical reason, we've got to do through that, Eurozone CPI. So the CPI news are coming up this week. That's probably the key moment of the week. See where inflation is at the moment. And if we again go back to my chart at the moment, based on the diet there, let's go to Wednesday, and we are looking at the consumer price index. Here we go. We're expecting a little tick up from 0.2 to 0.3, and all in all to stay at 2.4 year on year. But that will be obviously a key moment to know where, obviously, the Feds are going to do about the famous Fed rates, which we never stop talking about, for potentially a good reason, of course. But at this state, that is where we're at. So that will be the key economical news for this week, I think. There will be also PPI, but that's just a kind of a redress, on a recap on the last PPI numbers. Bank of England governor's speeches. Not sure if that's going to make a lot of difference at the moment. US retail sales and jobless claims, the usual weekly thing that comes up from the US. And then the major company news this week. Now, we have got Oracle on Tuesday. That's going to be interesting in terms of AI cloud reporting. That could also spin the AI market again around the way. We've got biotech and NIO, which I don't know much about, but that's on Tuesday. Wednesday, nothing more that I can see there. Campbell's Soup's company, but that's not something I would look. But this is, for me, the big one. I might even do a extra feature program. So is my age there. YouTube show for that one. It is the Adobe result, the Q4 result for the year. This is the big one. That is the one I've been waiting for. As you will see, Adobe is in the red for me at the moment. It has been for quite a while. I bought it really as a bit of a falling knife, I think, at this stage when I bought it at 10-15% discount. I didn't have the system I had now about 6-7 months ago in terms of value investing and buying it. It's very strict criteria and MOS, margin of safety, which I keep harping on about. I'm sure you're probably sick and tired of hearing it. But at this moment, Adobe is definitely one to look out for me and where that will go. Because at the moment, as we go back to that side, is at currently at 218, holding quite well at the moment. It has made a bit of, an up. David Borry apparently, Mr. Borry bought into The Big Short. Mr. Borry, for some of you who don't know, bought in quite a lump sum of cash into Adobe. That's just rumors. We're not sure if that's actually the case. But anyway, certainly is holding around 281, and it has actually weathered the storm of the Middle East for the past week so far. So right now, I'm quite a bit in the red, as you can see. But if we could get a little pop-up back to 300, that would be marvelous. So let's see what the results are. I'll go into more detail the results of Adobe later this week, or as we near towards the update, which will be Thursday. So that's the big one for me, to tell you. Ulta Beauty even. That's obviously a big one as well in terms of, so some of you will be holding that stock. I know it was fairly well valued at last I looked at, so that's something else to look out for. Right, and the three takeaways really so far, and I like to finish with the takeaways of the week. It's inflation data, obviously, could move the S&P 500 again even more sharply, so that's the number one, the CPI news. AI earnings from Adobe and Oracle will be obviously the two big results of the week, so for me anyway so far, so that's to keep an eye on. And of course, the most important, the front runner, the headline of the week: oil and Middle East tension remain the biggest wild card. So that is where we're at in terms of the three takeaways for today anyway. So yeah, Middle East, AI earnings, and inflation. So that's the kind of recap for now. Just another quick last look at the markets before we kind of move on to this afternoon's session. As you see there, the headlines from Reuters, pretty similar to what I've just done. Actually, travel and bank stocks have been hit pretty hard, obviously for obvious reasons with the tension in the Middle East. So that is obviously happening at the moment. Fed interest outlook complicated by energy costs, so that's going to complicate the situation with the interest rates and so forth. So that's where we are at the moment. I have a quick look at my portfolio. Visa, which obviously you know about now, I've added from late on Friday, currently in minus in the red. It was actually finished on Friday in the green. By a minor amount, but currently at 313. I'm expecting Visa to probably fall back this afternoon and potentially a chance to buy in. Now, in terms of S&P Global, so far, touch wood, it has again weathered the storm massively. What a stock to have on your portfolio when things like that happen. It seems to have held up pretty well. I'm still about £100 in the red. I was actually nearly 150. Only bought, like you can see, I've only bought small tranches to start off with, and it's exactly the reason why when you buy into a stock initially, buy small, because you just never know what the headwinds will be. So better be slightly in the red or slightly in the green than buy a huge position in one go, which some of the big investors do, but they've got the money to do so and have a bit of a cushion. I have not got that same luxury. So still in pretty good nick, to be fair, considering what's happening with the markets. Visa is not financial, it's a merchant, but it's still connected to the financial market, which obviously is down at the moment, but quite a bit. So we'll see what happens. Now, obviously, this whole situation at the moment in terms of the markets being a red, for value investors, this actually is possibly a great time to buy bargains. And that's, the contrarian in value investors. When the burning house is happening, you don't go in. Well, those people do go in. Now, bargain hunting is a good thing at the moment. Whether or not it's bottomed out, that's another big issue, because obviously we don't know how far down at the time the markets will go, but there are certainly some good bargains out there, and I'm looking at them now, and I'm just picking a few that I've liked in terms of value and margin of safety. Microsoft, definitely one of them. That would be something I'm looking at. Maybe south of $400 a share. Potentially Visa, add to my position if it does fall back to 300, although I'm not sure if it will. I mean, it is a defensive stock, so whether or not it's, again, whether's the opening this afternoon, that will be another thing. S&P Global, obviously, I could add to it if it falls below 435, which is my opening gambit in terms of entry point. United Healthcare, again, great bargain. It was at 290 last week. It's now down to 281. I think if it went to 275, could be worth a look. Sprout is absolutely jumped amazingly. Again, consumer cyclical kind of stock. Obviously will do well in times like this because we always need food and we always need, material from someone like Sprout. So that possibly why. I'll just be aware of Sprout. Obviously, it's litigation, which is ongoing at the moment in terms of misleading some of their shareholders back in Q3 last year. So that's something that's still hanging in there. But still, 80, I mean, you could have bought this at 70 and made a very good bit of margin there, or profit even. MasterCard, again, potentially another great stock to look at. And Uber, which obviously I was with a few weeks ago, made a bit of money on it. I just felt it was the right time to sell. I needed to regenerate the cash. But now looking at $74 a share, I bought at 73.80 last time. If it was to fall around between 70 and 72, maybe worth another position. Now I've got to be careful with my position. I have got a bit of money left on the side to buy in. Obviously my buying in is my deposit money, which will buy me the stock. Currently my margins are obviously around the £2,000 mark there, 1,100 on Adobe, 892 on S&P Global, 626 on Visa. So every time I add a position, obviously that will diminish my account slightly. But I still got money. Whether I weather the storm, that's another thing today. But I still think that today's opening will be fairly violently into the red. But it has surprised me before in the past. But with the crude oil at the moment being where it's at, I think, and in the inflation, I think this could be a painful opening. But we shall see. So that's me really for the opening show of the week. I hope you liked. Really not much more to add at the moment in terms of anything else. I think my next show this evening will be interesting. see where the markets are at, where my stocks are at, whether I've added or not added, and where is crude oil going to be. At the moment, it looks like it's flatlining just above $100 a share at 104, but that could pop again on the opening this afternoon as liquidity comes back into the market. So let's get ready for another turbulent week. I think it should be fairly interesting. So on those wise words, this is Trader72. Please subscribe and like. I've had a few viewings on my opening shows, but can always do with more. So please do keep an eye. If there's anything you want me to change or more information or anything else that you want me to add to the show, please do make your comments. It's always very helpful, even if it's positive or negative. So it's Trader72 over and out. See you this evening. Good luck all.